Okay, so we're diving into some pretty choppy waters today. We're talking about how to make sense of investments with all this new uncertainty, caused by those tariffs that just slammed into effect March 31st, 2025. 25% on stuff from Canada and Mexico, and then a big old 20% on everything coming in from China.
Yeah, you really can't overstate how massive those adjustments are, right? I mean,
Yeah.
the kind of uncertainty they inject into markets, it's a lot for anyone to wrap their head around.
And for everyone listening, that's exactly what this deep dive is for. We're cutting through all that noise and getting to what matters most. What should you actually be doing with your money?
Hmm.
Especially with stuff like gold, silver, the usual suspects, but then also this whole Bitcoin thing.
Right. It's not just your grandma's portfolio anymore.
Not at all. So to help us kind of untangle all of this, we're turning to a pretty well-known voice, even if he's a bit controversial sometimes. We're talking Robert Kiyosaki, specifically his book, Rich Dad, Poor Dad.
I think Kiyosaki's framework gives us a way different way to look at wealth and at how these economic cycles work. It definitely challenges a lot of the conventional wisdom.
For sure. So anyone who hasn't read the book yet, let's quickly run through the core idea, this poor dad versus rich dad thing. What's the real difference there?
Well, the poor dad mentality, as Kiyosaki explains it, is all about that steady paycheck, right? The job security, you climb the corporate ladder, all very traditional. But the rich dad approach, that flips the script completely. It's all about building wealth by acquiring assets, things that actually make money for you, whether it's income or just growing in value over time. So they're working for you, not the other way around.
So basically the difference between relying on your salary and owning something that makes you money, regardless of, whether you're actually clocking in at work.
Precisely. And that's where these assets we keep mentioning come into play. Gold, silver, and now increasingly, Bitcoin. This is how Kiyosaki says you navigate those economic storms.
He's been talking about gold and silver as that safe haven against inflation and instability for decades. And more recently, he's gotten on the Bitcoin train, seeing it as that kind of modern digital store of value that's, outside the control of governments and banks. And his whole argument is these things can actually hold their value or even go up when the rest of the economy is tanking.
Exactly.
And that ties directly into what we're dealing with right now with these tariffs. I remember Kiyosaki saying something about 2025 specifically, something like crashes mean assets are on sale. It sounds like he sees these tariffs as like that trigger for a downturn, which could be a good time to buy those assets at a discount.
Yeah, that's a huge part of how he approaches investing. He doesn't just see economic contractions as bad news.
Yeah.
For him, they're potential opportunities to snag those undervalued assets if, you have the money and the guts to go for it. That's the core of the rich dad mindset, turning financial chaos into a chance to build wealth.
Okay, so let's get into the nitty-gritty of it all. What are economists predicting about the impact of these tariffs, the ones on Canada, Mexico, and China? What's 2025 going to look like?
Well, forecasts are pointing towards a definite slowdown in the U.S. economy. Estimates are kind of all over the place, but we're looking at somewhere between a 0.2 and a 1.2% reduction in GDP. That's the total value of everything produced in the country, just so everyone's clear. And at the same time, consumers are going to feel the pinch too. Prices could rise anywhere from 0.2 to 1%.
Yeah, that sounds like it'll hit everyone's wallets pretty hard.
Yeah.
And it's not just about the overall economy, right? We got to talk about jobs.
Absolutely. We're looking at estimates of around 223,000 potential job losses. This paints a pretty stark picture of, a real economic slowdown. And those new trade policies, well, they're right at the heart of it.
Now, Kiyosaki's been saying these tariffs might actually cause a temporary drop in the prices of gold, silver, and Bitcoin, which seems kind of counterintuitive, right? Those are supposed to be the safe havens. So what explains that initial dip?
It's all about how people react when things get really uncertain, when those markets start getting super stressed. Some investors, they just want to get their hands on cash fast, maybe to cover losses elsewhere, cut their risk. So they sell off everything, even those traditional safe havens. And that sudden rush to sell, it can push prices down across the board. So even though gold, silver, and Bitcoin, they're seen as long-term stores of value, they're not immune to those short-term panics. It's all about fear and that need for liquidity.
Makes sense. And we actually saw this play out with Bitcoin earlier this year, right?
Yeah.
That dip back in February.
Totally. Remember that. Bitcoin fell to like $92,883 in February. But the interesting thing is how quickly it bounced back. By February 18th, it was already back up to 94,811, which just shows you how volatile Bitcoin can be, but also how it can recover pretty darn fast. It makes you wonder if that whole buy the dip mentality is already baked into the system.
So what about gold and silver? There's supposed to be those inflation hedges. How will these tariffs shake things up for them in the long run?
Well, tariffs make imported goods more expensive, right? And over time, that can definitely fuel inflation. So, in that scenario, gold and silver, with their long history of being that safe haven against inflation, could see their prices go up over time, especially as long as those tariffs keep things volatile. But just like we saw with Bitcoin, there could be those initial dips as the market figures out what's going on. It just goes to show how differently assets can react to the same big economic events. It's never simple.
So for everyone listening right now, in 2025, this creates a real dilemma. Do you follow Kiyosaki's advice and buy the dip? Try to get those assets while they're potentially cheaper, hoping for a long-term gain? Or do you play it safe and see how things shake out? How do you decide which way to go?
That's the million-dollar question, right? Kiyosaki's whole philosophy is to jump on those opportunities when everyone else is running for the hills. But that comes with risks. There's no guarantee that prices will bounce back quickly. And this whole tariff situation could drag on a lot longer than anyone expects. So maybe a more cautious approach is better. Wait for more data, see how those assets perform over the next few weeks or months. Keep an eye on things like inflation numbers or any new policies that come out in response to the tariffs.
Okay, let's shift gears and talk a bit more about Kiyosaki himself. He's been pretty vocal this year, predicting this downturn because of the tariffs. And he keeps pushing gold, silver, and especially Bitcoin. But it seems like he's gotten even more bullish on Bitcoin recently, hasn't he?
Yeah, that's an interesting observation. He's still talking about gold and silver, of course, but his recent statements show a really strong belief in Bitcoin. He's even gone as far as to predict it could hit $250,000 by the end of the year. That's a huge jump, and it suggests he sees Bitcoin as the best way to protect yourself against, currency devaluation and a shaky financial system.
So how are people reacting to all this? I know Kiyosaki's predictions tend to stir up a lot of debate online. What are people saying?
Well, it's a real mixed bag, honestly. Over on X, you see everything from full-on agreement to outright dismissal. Some people really resonate with what he's saying. They see him as someone who understands the way markets work and isn't afraid to, challenge the status quo. They point to his past predictions, some of which have been spot on, as proof that he knows his stuff. But then you have a whole bunch of others who are much more skeptical. They don't buy his predictions or his whole approach, for that matter.
Right, because let's be real. He hasn't always been right about market timing. Remember, the S&P 500 actually had a pretty good year in 2024, like a 23% rise. And that was despite all his warnings about a crash. So how does that affect how we view his current predictions?
It definitely casts a shadow, right? If the S&P 500 did so well despite his bearish outlook, it makes you wonder about his current pronouncements. It just goes to show how hard it is to get those market movements right. And it really underscores that, for you listening, it's crucial to consider all sides of the story. Don't just rely on one person, no matter how famous they are. Make informed decisions based on as much information as you can gather.
Couldn't agree more. So here we are, March 31st, 2025. These tariffs are officially a thing, and they're stirring up a lot of economic uncertainty. And Kiyosaki's perspective, even with its ups and downs, is definitely part of this conversation. And for our listeners, this connects back to some of the themes we've explored in past deep dives. We know you're interested in learning about finance, and we saw that with the great response to our episode on AI and the comics industry, which touched on some pretty new economic models. And you also like to keep up with those big economic trends, like when we talked about the DOGE probe and how speculative assets work.
What's really relevant right now is how these tariffs are actively changing the investment landscape as we move through 2025. This isn't just some theoretical stuff. These policies have real-world consequences that investors need to understand and potentially incorporate into their strategies. It's about adapting to a new reality.
Exactly. So it's like walking a tightrope. On one side, you have Kiyosaki's optimistic, maybe even overly optimistic view that these tariffs will create buying opportunities for things like gold, silver, and especially Bitcoin. But on the other side, there's the current market situation and the very real chance of, continued volatility and uncertainty. It all comes down to weighing the potential rewards against the potential risks.
And if we tie this back to the main ideas in Rich Dad, Poor Dad, it shows how important it is to understand different financial philosophies, even if you don't agree with every single point. It gives you a framework for thinking about protecting your wealth and growing it, especially during times of economic upheaval. And that framework, it goes beyond the usual investment advice.
So wrapping things up, we've really dug deep into this key tension. The possibility of an economic slowdown caused by these new tariffs versus the chance, at least according to Robert Kiyosaki, to grab assets like gold, silver, and Bitcoin at potentially lower prices. It's a real gamble.
And that brings us to a final crucial thought for all of you out there. Given that we're facing both short-term market swings and potentially long-term economic shifts because of these tariffs, what are the specific things you'll be focusing on when you make your financial decisions in 2025? It's all about taking in these different perspectives and then choosing the path that aligns with your own financial goals and, how much risk you're comfortable with.
And that, my friends, is where we leave you to ponder. Until next time.